Do you ever wonder that POTUS, the President of the United States, is biggest threat to your portfolio? Let's find out in this research note. If you thought the first Trump term was unpredictable, 2026 is on another level. We aren't just talking about trade deals anymore. We are talking about the US demanding to buy entire islands like Greenland and using massive tariff as a weapon to make it happen. For an Indian investor, this is a wake-up call. We are seeing a US administration that is willing to break 70-year-old alliances to get what it wants. If they can put a 25% tariff on their oldest European allies over a piece of land, what does that mean for your investments in India? The friendly era of global trade is officially over. Let's look at the numbers. As of January 2026, Indian exports to the US are being hit with a 50% tariff. That is one of the highest in the world. The US Treasury is being very blunt. They are using these taxes to punish India for buying Russian oil and trading with Iran. Just last week, a new tariff was threatened for any country doing business with Iran, which directly puts India's investment in the Chabahar Port at risk. If you have money in Indian oil, shipping, or export-heavy sectors like textiles and diamonds, you are already feeling the heat. This isn't a future threat. It is happening right now, and it is hurting the profit margins of Indian companies. But you might ask, why should I care about Greenland? You should care because it shows the Trump method. By threatening its own NATO allies with economic ruin unless they sell territory, Trump has shown that friendship doesn't protect you from tariffs. For India, this means our special relationship and the bond between PM Modi and President Trump has its limits. In early January 2026, Trump openly said, Modi knew I was not happy. It is important to make me happy. This tells you everything. Indian investments are now tied to how well our government can make the US happy on issues like Russia, Iran, and digital taxes. Yesterday in Davos, we saw a classic Trump move. He called PM Modi a fantastic man and promised a great deal for India. This caused a small rally in Indian export stocks this morning. But don't be fooled by the smiles. While the president talks about a deal, his administration is pushing a bill in the Senate that could raise tariffs on Indian oil purchases to a staggering 500%. This good cop, bad cop routine creates a massive uncertainty. For your portfolio, volatility is the new normal. One tweet or one interview can cause the Sensex to jump or dive by 2% in an hour. In this environment, buying the dip is dangerous if you buy the wrong things. If the danger zones are any company or all companies that are depending on US and Europe for their revenue, then the safe zones is the domestic infrastructure and defense. India is spending record amounts on its own roads, railways, and weapons. These sectors don't care about what happens in Greenland or in the US Senate. They are driven by the Indian budget and not US trade policy. So the question is your money under threat? Yes, the Greenland style of negotiation, where tariffs is used as a club, is the biggest risk to the global stability we have seen in decades. So the verdict for year 2026 is that India is for India. The more a company sells to the Indian middle class, the safer your money is. The world outside is becoming a battlefield of tariffs and force. Your job as an investor is to find the companies that can survive and grow right here at home. Remember, risk management keeps you in the game, but opportunity management is what wins it. As we navigate the shifts of 2026, don't just watch the numbers. Understand the narrative. Hit subscribe to stay ahead of the curve with insights that look past these headlines. So thank you for your time and thank you for tuning in.